Real estate has been widely acknowledged as a profitable investment opportunity for quite some time, offering the potential for substantial returns and long-term wealth creation. However, the industry is often shrouded in myths and misconceptions, leaving many aspiring investors needing guidance on how to truly make money in this field. In this video, we'll explore the various strategies employed by successful real estate investors and shed light on the realities of generating profits in this dynamic market. Traditional real estate investment strategies buy and hold. One of the most common and time-tested approaches to real estate investing is the buy and hold strategy. This method involves purchasing a residential or commercial property to generate income through rental payments and benefit from long-term appreciation in the property's value. Rental income is the primary source of cash flow for buy and hold investors. Investors can generate monthly income through a meticulous selection of properties in sought-after areas and adept management techniques. Over time, as rents rise and mortgages are paid down, the potential for increasing cash flow grows. Property appreciation is another key factor in the buy and hold strategy. As the real estate market expands and the need for residential or commercial properties rises, the property's value is likely to appreciate. This appreciation can be realized when the investor sells the property, potentially generating a substantial profit. However, the buy and hold approach requires careful consideration of financing options, property management responsibilities, and ongoing maintenance costs. Investors must also be prepared for potential vacancies and periods of reduced rental income. House flipping, popularized by numerous reality TV shows, involves purchasing undervalued properties, refurbishing or enhancing them, and subsequently selling them for a profit within a relatively brief period. The crucial factor for successful house flipping is recognizing properties with substantial potential for improvement, whether due to their location. Investors must have a good eye for spotting diamonds in the rough and accurately estimating the costs of renovations and improvements. Once a suitable property is acquired, the investor must efficiently manage the renovation process, ensuring work is completed on time and within budget. This often involves coordinating with contractors, securing necessary permits, and making design and material selections that will appeal to potential buyers. After the renovations are complete, the property is then listed for sale, ideally at a price that generates a substantial profit for the investor. However, house flipping carries inherent risks, such as unexpected renovation costs, market fluctuations, and the potential for holding costs if the property fails to sell quickly. Alternative real estate investment strategies, real estate investment trusts, REITs. If you are seeking to invest in real estate without the obligations of direct property ownership, real estate investment trusts, or REITs as they are commonly called, can provide a great alternative. These entities own and oversee a selection of revenue-generating real estate assets, such as apartment complexes, shopping malls, or office buildings. Through investing in a REIT, individuals can access a diversified array of properties and enjoy the income generated by these assets. An advantage of REITs is their liquidity, given their public trading status on major stock exchanges, enabling investors to trade shares easily. Nonetheless, investors should recognize that REITs are susceptible to market fluctuations and may not offer the same degree of control as direct property ownership. Crowdfunding and real estate platforms. The emergence of crowdfunding platforms has unlocked fresh possibilities for real estate investing, allowing individuals to pool their resources and participate in larger projects or portfolios of properties. Through these platforms, investors can contribute funds to specific real estate projects, such as developing a new apartment complex or renovating a commercial property. In return for their investment, participants typically receive a fraction of the rental income produced by the property or a percentage of the proceeds when the property is sold. Crowdfunding platforms offer investors the chance to broaden their real estate portfolios and access opportunities that have been beyond the reach of individual investors in the past. However, it's crucial to thoroughly research and vet these platforms and the specific projects being offered to mitigate potential risks. Real estate partnerships and syndications. Another alternative strategy involves forming partnerships or participating in real estate syndication. In these arrangements, multiple investors pool their resources to acquire larger or more complex properties that would be difficult to finance individually. Partnerships and syndications often involve a lead investor or sponsor identifying and securing the investment opportunity. Meanwhile, other investors contribute capital in return for a stake in the profits or ownership of the property. This approach allows investors to leverage the lead investor's expertise and experience while diversifying their risk across multiple properties or projects. However, it's essential to carefully evaluate the lead investor's or sponsor's track record and reputation, and thoroughly review the partnership or syndication agreement to understand the terms, risks, and potential returns. Key factors for success in real estate investing: market research and analysis. Regardless of the investment strategy adopted, real estate investing success necessitates a profound comprehension of local market conditions and trends. Investors must stay informed about population growth, employment rates, housing supply and demand, and infrastructure developments that influence property values and rental rates. Extensive market research is essential for identifying lucrative investment prospects, pricing properties accurately, and foreseeing potential challenges or risks. This may involve analyzing historical data, monitoring current market conditions, and staying abreast of local economic and demographic shifts. Building a strong team: real estate investing seldom happens in isolation. Building a team of reliable professionals can be invaluable for navigating the intricacies of the industry and optimizing returns. For instance, collaborating with seasoned real estate agents can offer valuable insights into local markets, negotiation tactics, and property appraisals. Establishing relationships with reputable contractors and renovators can ensure that any necessary improvements are completed efficiently and to a high standard. Additionally, investors pursuing rental properties can streamline the process of finding and vetting tenants, collecting rent, and handling maintenance issues by partnering with a reliable property management company. Financial management. Effective financial management is crucial in successful real estate investing. This includes securing appropriate financing options, such as mortgages or investment loans, and carefully evaluating the associated costs and risks. Investors must also ensure they understand cash flow management and budgeting for expenses like property taxes, insurance, and maintenance costs. Proper financial planning can help manage the impact of vacancies or unexpected expenses, ensuring the investment's long-term viability. It is also important to consider the tax implications of real estate investments and take advantage of available deductions and strategies to minimize tax liability. Risks and challenges in real estate investing. Although real estate investing can yield substantial profits, it has risks and challenges. Understanding and preparing for these potential obstacles is crucial for long-term success. Market fluctuations and economic conditions. Real estate markets are cyclical, with cycles of growth and decline influenced by broader economic conditions. Factors such as interest rate changes, job market trends, and consumer confidence can significantly impact property values and rental rates. Investors must be prepared for these fluctuations and have a contingency plan to weather potential downturns. Diversifying investments across various property types and locations can help reduce the effects of local market fluctuations. Tenant and property management issues. Managing tenants and maintaining properties can be a significant challenge for investors pursuing rental properties. Vacancies, non-payment of rent, and property damage can all negatively impact cash flow and profitability. Effective tenant screening, clear lease agreements, and proactive property maintenance are essential to minimizing these risks. Moreover, collaborating with a respected property management company can ease some of the responsibilities linked to day-to-day operations. Legal and regulatory compliance. Real estate investing is subject to a myriad of local, state, and federal laws and regulations, covering areas such as zoning, fair housing, environmental considerations, and landlord-tenant relations. Failure to honor these regulations can result in costly fines, legal disputes, and the possibility of litigation. Investors must stay informed about relevant laws and regulations, seeking professional legal advice when necessary to ensure compliance and protect their investments. Overextending and over-leverage. Another risk in real estate investing is the temptation to overextend oneself financially or become over-leveraged. While leverage can amplify potential returns, it also increases risk and financial exposure. Investors must carefully evaluate their financial capacity and avoid taking on more debt or acquiring more properties than they can reasonably manage. Maintaining a disciplined approach to investment decisions and avoiding overconfidence can help mitigate the risks of overextension and over-leveraging. Final thoughts and advice for aspiring real estate investors: education and continuous learning. Real estate investing is a continuous learning journey, and successful investors understand the importance of ongoing education and professional development. Whether through formal courses, industry seminars, or self-study, staying up to date with market trends, legal and regulatory changes, and best practices is crucial. Developing a long-term strategy. While some real estate investment strategies may yield quick returns, sustainable wealth creation often requires a long-term perspective. Investors should develop a comprehensive plan that aligns with their financial goals, risk tolerance, and investment horizon. This strategy should incorporate diversification across property types, locations, and investment vehicles to mitigate risk and capitalize on various market opportunities. Staying disciplined and patient. Real estate investing requires a significant degree of discipline and patience. Investors must resist the temptation to chase short-term gains or make impulsive decisions, as these can often lead to costly mistakes. Instead, successful investors remain disciplined in their approach, conducting thorough due diligence, adhering to their investment strategies, and patiently waiting for the right opportunities to present themselves. Diversifying investments. Although real estate can offer significant financial opportunities, it's crucial to acknowledge that it should be integrated into a diversified investment portfolio. Overconcentration in any single asset class can increase risk and limit potential returns. Investors should consider diversifying their portfolios, such as stocks, bonds, and alternative investments, to reduce risk and embrace a comprehensive approach to wealth accumulation. Real estate investing offers numerous opportunities for generating income and building long-term wealth. Still, it also demands a profound grasp of the market, a strategic mindset, and a readiness to tackle the inherent risks and challenges. By exploring traditional strategies like buy and hold and house flipping and alternative options like REITs, crowdfunding, and partnerships, investors can tailor their approach to align with their objectives, resources, and risk tolerance. Ultimately, successful real estate investing requires education, thorough research, financial discipline, and a long-term commitment to the process. By embracing these principles and staying informed about market trends and best practices, aspiring investors can enhance their likelihood of attaining financial success in the ever-changing realm of real estate.